My name is Herb Meiberger. I'm a commissioner of the San Francisco Retirement Board, and I've sponsored several resolutions regarding the banks. Among them, level 1 has to do with the social policies, as does level 2. Level 1 is to vote against any chief executive officer who also holds a position on the respective board. For example, John Stump, in addition to the CEO, we're voting to give him a seat on the retirement board. I beg your pardon, on his board, as well as Jamie Dimon, for example. So that's to do with level 1. Also to withhold compensation from certain executives. So that's the substance of level 1. Level 2 is engagement. I would characterize it. Houston, we have a problem having to do with the discriminatory and what have been judged as illegal, predatory, racially targeted loans by several banks, among them Wells Fargo, JP Morgan, and Bank of America. The resolution applies broadly to all banks. It's not a target against any one specific bank or anything, but broadly, in essence, to say that this is not the way to do business.
Yeah, you think that the city and county employees in San Francisco should take this action with their funds?
Yes. When you pay a fine, that reduces the value of your holdings. So that is a key issue. Fines have been paid in terms of Wells Fargo, paid a fine of $175. That reduces the value, I beg your pardon, $175 million. It reduces the value of the holdings. So when there are fines, particularly based on illegal activities, I think we have to say, no, we do not condone this, and to vote our proxies to that effect.
And what about the idea of public banking? Where do you stand on that? Do you think there should be public banks?
I'm open to the idea of it. When you see these kinds of things happening, you pretty much know there may be a better way of doing so. So I'm all ears.
And do you think they should be criminally prosecuted? It seems like they're above the law. They seem to get away with practices that violate the law.
Interesting point. Sarbanes-Oxley, 2002, put a higher standard for the chief executive officers. That is, they had to sign off on the financial statements. I think a similar process should be involved with any kind of unethical or illegal activities.
And are the unions supporting your efforts here?
Yes. The unions are totally behind this. There are representatives from SCIU, the Service Employees Retirements Union. Local 21 is involved as well, and many. The San Francisco Retirees Association is voted in favor of adopting these resolutions. So yes, labor is very strongly behind this.
So the majority of workers who are represented by the unions are actually supporting this?
Clearly, without a doubt. They're the 99%.
You don't have any comment.
Love Banksters. Really don't reel it. Doesn't even mean it's any bank here. I do own Banksters, but wait, Bankstop.
Excuse you. We need.
Is there
the president of the board is conducting the meeting, and there will be a call from the president of the board or the acting president of the board if there are any other recusals. And we would ask that, as you have shown in the past, that you respect the process and that you preserve the right to be heard.
I'm conflicting myself out of this vote, so I will leave. And I think that's the fair thing to do. And any other commissioner who has that same conflict should.
I just wanted to make a statement. I'm Brenda Wright, and I was appointed to this board by Mayor Willie Brown and reappointed by Mayor Gavin Newsom as a private citizen, not as an employee of Wells Fargo Bank. I work for Wells Fargo.
Please, folks, let's calm.
I work for Wells Fargo, so we'll be recusing myself from this.
Thank you.
But I also wanted to note that I am personally offended by the fact that you took personal actions against me up to and including threatening to protest my home. So I would want to let you know that I believe that as you have your rights, I have my rights, and I believe that you have infringed upon my right to serve as a private citizen.
Excuse me. Thank you. You'll all have an opportunity to make public comment.
Mr. Chair, I don't believe I have a conflict, but I believe I have a disclosure issue I'd like to make. I have an acquisition of $11,000 worth of Bank of America securities. I don't believe that that dollar amount whatever decision comes out today will materially affect my investment or will materially affect Bank of America's profits or losses. Therefore, I will proceed and sit in the meeting.
Thank you. Board members.
4 times now. It's like we're just coming and nobody's listening. Sure, the guy said some of this is our fault, true enough, but at 43 years old, having $40,000 to put out on a home in the Mission District on 20th, and working at San Francisco General Hospital, walking to work. Oh, yes, I'm a retiree. My money's in Wells Fargo. It's in the retirement system. But let's see. First it was Washington Mutual, Wachovia, and then Wells swooped up everything. The interest rate kept going up every year. I have never missed a payment. My payments go up twice a year. They told me if I miss payments, they would give me a modification. But at the same token, they're trying to steal my house because of the equity. I went to work with fractured back and worked. My house is not paid for, but now there's so much equity, Wells Fargo want it back. And they've locked me into a loan that I can't get out of. And if you're kicking folks out of their homes, are you going to give some of the people a place to live where you got these projects that you're building with our money? This is our money.
Modify Gladys' law.
Never miss no payment. You're never.
Carry out racist practices, as Wells was specifically fined $175 million for. This is not just about investment health. Fiscal health begins with investments in healthiness. And it has been shown via the Security and Exchange Commission and as well as the Department of Justice that these banking institutions are not contributing to the health of our society and our nation at this time. Any person who receives a paycheck or who is on the dole from Wells Fargo is of course going to sing their praises. If I received a paycheck from Wells Fargo, or if they were supporting my community desires, then I would be singing their praises as well. However, when I stepped away from my job as a city worker at a wastewater treatment plant, as a maintenance mechanic who was being rained upon by feces and urine every day working for my city, I went to Wells Fargo and I said, look, I've emptied my retirement, I've put every penny into this house, and I need help with the modification. When they finally said that they had a modification or a forbearance agreement in place for me, they turned around the following day and sold my home at auction.
Yeah, right.
I had a meeting with Mr. Alfredo Pedroza, who sits here in my supervisor's office, at which time he pleaded that there were no cases like this that Wells Fargo could refer back to, that this was not occurring. I am a real person too. And my entire life, my only desire was to buy my home and live out my life in San Francisco. I got hit by a car when I was 9 years old. I took the $25,000 that I had from that and I put a down payment on my house.
Yeah.
We're calling on every SF public office to pressure these banks to write down hundreds of millions in principal that was illegally inflated by the banks in the first place. Mr. Driscoll, you are not a fool. You have a great pension. You decided to work for your city and to put your life on the line. Now, we should not take your money and invest it with banks who have been shown to be committing nefarious, predatory, and racist acts against the community. Here at SFERS, we're calling on the passing of these resolutions as an honest step towards the board adhering to their own policies. Thank you again, Mr. Meiberger. In my case, it's been shown that Wells illegally foreclosed on my home. They are still guilty of dual tracking. They are still guilty of providing multiple single points of contact. And they are documenting their own violations to the Homeowners Bill of Rights, which was passed down through Kamala Harris in order to attend to this situation. Now, again, any person that is getting a paycheck is going to sing the praises of whoever's writing that check for them. We are again asking that you just take one step in saying that if you are a CEO, you should not be sitting on the board of a group that is determining the lifeblood of folks who work for the cities. You know, I'm having feces rain down upon me because I believe in what I do and I believe in water quality and I want good water quality for my city. But you know what? Don't put my money in with Wells Fargo when they specifically lied to me and said, we didn't receive your hundreds of pages of information that I have copies of, that I have the cards of the folks from the branches that I faxed all this information from. Without the involvement of Nancy Pelosi's office, Wells Fargo would not have adhered to the forbearance agreement that they set forth with me in writing. Without the involvement of having Mr. Pedroza come in and lie and say, oh, things like this never happened, without the involvement of my supervisor, I wouldn't be standing here today. And I'm going to continue to fight for my home. I think this is a multi-headed monster, and we need to attack it from all angles.
Good afternoon. My name is Marguerite Young. I am with the Service Employees International Union's Capital Stewardship Program. My job is to participate in the deliberations that pension boards all over the country make around responsible investment of our members, 800,000 members in public pension funds. Of their investments, I spend a lot of time paying attention to corporate governance and the interpretation of what fiduciary duty is. I have witnessed our members' retirement accounts plummet after 2008, and with due respect to Mr. Stansberry, while they may be back to where they were in 2008, they're not where they should have been in 2013. We have not made actuarial progress in the last 5 years. We have barely made any progress in the last decade. That is part and parcel due to the financialization of our economy and the financial sector, with the banks at the head of the pack. So while we are acting today on the specific predatory practices that are called out in the board's social investment policy, what I actually ask you to do today is act in your fiduciary duty. Yes, the legislature has a role. Yes, the courts have a role. But yes, you have a role as fiduciaries to manage and take account of the risks that your portfolio has, and to understand and to engage where necessary
30 seconds.
to deal with those risks. CalPERS, CalSTRS, New York City, New York Common, North Carolina, and the list goes on, have voted in favor of separation of chair and CEO, have voted against pay packages that are outrageous, have voted in favor of mortgage servicing resolutions that call for disclosure and auditing. Get into the 21st century, San Francisco.
Woo! Get out of this.
Get out of a windowless room. Allow people who asked to be here to be able to participate when you were given notice. And you agreed to give us room, and you did not.
California. You know, we hear a lot of people saying that, you know, we don't work with people. There are a lot of people on the Wells 52 that we have worked with. In some cases, we gave them an interest rate of 2%. I would love 2% loan, right? But it wasn't enough. 12 out of the list have recently completed modifications. 10 have completed foreclosure sales. 24 are delinquent. 4 of them are on active workout plans. 4 were previously reviewed. 16 were reviewed and denied because of documentations. 6 received modifications but then defaulted. 12 are equity home. 3 of those lists are not even Wells Fargo loans. So I just got to say that, you know what, we are Wells Fargo. We are this city. We are these communities that we represent day in and day out.
Really?
Yeah, really. Respeto, mija. Respeto. Have respect, okay? All right? Okay, so look, we're here to help. But it works both ways, and we want to do that, okay?
Sit down and meet with us.
Excuse me.
So anyway, as I was saying, look, we go out of our way to try to help people. We have events, we have home preservation centers where we invite people to come in. We are Wells Fargo, we are our communities, and we care about the places that we live and we work.
We've
Thank you.
never been invited, never.
For Commerce, 1,500 local businesses from throughout the city. I'm pleased to be here today and to urge you to support Commissioner Macris's motion and to oppose the original motion that was presented. I think what you've seen here is a outpouring of really outrage by the business community over unfair attacks on local companies. These are banks that employ thousands of San Franciscans, our neighbors, our friends, and the whereas clauses were so out of touch with the reality of what happened. The banks that you might be targeting don't exist anymore because of their subprime mortgage policies. Where's Wachovia? Where's Washington Mutual? Where's Countrywide? They're not here because those were the banks that caused, in large part, the financial meltdown that occurred in 2007 and 2008. The federal government asked Wells and Chase and Bank of America to help pick up the pieces. We should be proud that we've got an economic house coming back into order because of the banks that remained after the crash. So we urge you not to take this policy, not to target local industries. If you have policies on proxies and how you're going to vote those proxies generically
30 seconds.
on all companies of which this pension plan is invested in, so be it. But don't target unfairly local businesses.
To allow people who, for whatever reason, can no longer hold on to their home to stay in that home. You guys do not have the same policies as Fannie Mae and Freddie Mac that allows for a period of time for tenancy after the loss of foreclosure. This affects the fabric of our community. It really destroys what we value here. When you talk about the mission, sir, you talk about the people that live there. The people that lost their home, let them stay. You lose nothing. You make money as a landlord. Now, I'm supposed to read a letter from my AD. I'm supposed to tell you guys that CalPERS and CalSTRS already divested from a scheme that was very similar in East Palo Alto, where folks were being evicted. I'm also supposed to tell you guys that you guys are opening yourself up for potential liability, as we know that some of these practices are fraud, and you guys as investors will potentially pay some of those costs. So the employees of the city should not have to pay for that. But I lost a home to foreclosure from Wells Fargo. So I'm passionate, I'm angry, and I get absolutely incensed when I hear people who are well-meaning tell you that because they got a few pennies, now this bank is supposed to be great. Well, I have this letter, I'll give it to you, I'll let you guys read from the executive director at Tennis Together. He's a very calm person. I clearly am not, because what's happening here is outrageous, and you guys should be mad.
People thought I'd give a little bit of a generic response. In terms of level 3, I, like Commissioner Meiberger, do not support divestment. If at some point the investment became, these investments were risky and it was detrimental to our system, or there's some other extreme extenuating circumstances, then I think we can revisit that. Level 2, I don't view the retirement system as a political body. I view the Board of Supervisors as a political body. They make resolutions that affect things not just here in this city, but outside the city and around the world. And I view our task as very specific. It is to invest city employees' money so that when they retire, that they have a secure retirement. In terms of level 1, there are parts of level 1 that I like and I agree with. I think that certainly a separation of power is an important thing, especially in terms of governance. It's a check and balance, much like our government. But in terms of seeking additional resolutions and additional disclosure, the government's already been working on that. There are settlements with the Attorney General. There's going to be resulting changes that come from that. And again, it goes back to what I said about level 2. I want us to be very specific and targeted in what we do, and it's an investment of your money and not just your money, the other 50-odd some thousand people that are in the retirement system, and that we do it in a way that maximizes our return without pushing the political envelope. That's what politicians are for. We are here to guarantee the financial security of this trust. So for those of you who I think were wondering sort of where I stood on it, I wanted to be specific.
I hear the tale of two cities here today. Wells Fargo is brilliant with foundations and things, and maybe that's true, but I have lots of neighbors that have been foreclosed upon, and I've seen the runaround they've gotten from bank officials, lost forms, over and over. They've gone to huge conferences to help them keep their homes. Something is not right here. There are two big pictures that really are totally opposite. I took my money out of Chase. I don't know where Bank of America and Chase are. They didn't get an invitation to come. I don't quite get that. I took my money out of Chase because I got sick of seeing people lose their houses, and I don't want my retirement money to stay in banks that are like this.
I couldn't believe it. I just didn't believe that. How could that not be illegal? Isn't there a law against that? Well, it's a conflict of interest for sure, and I think that Mayor Lee must understand that. Don't we all understand that that's a conflict of interest?
We do.
Yeah. Anyhow, so I'm outraged because of that, and I feel like the people who are part of the retirement system ought to be involved in these meetings, and that's why I'm here. Also because I've been personally interacting with people who are losing their homes. My neighbors have been evicted and their homes have been auctioned off, sometimes without their knowledge, while they thought they were working on a loan modification, and Wells Fargo has been at fault. I don't know how you can explain that, but you know, try to imagine what it's like to lose your home and to not be able to get your home back. It seems like Wells Fargo, and I know they've been throwing money around San Francisco for many, many years, I can see that. And it buys many things, and it seems to me that it's bought our retirement system.
That's what they bought.
I am a 66-year-old senior, been through a lot, cancer, blindness, and just still fighting to stay in my home. Now, in the beginning, I think a lot of breakdowns started in the beginning. Wells Fargo wouldn't even talk to me. I tried for months and months, so they had no idea what my problem was because I was sent from place to place to place. And, you know, after they wouldn't talk to me, I just started fighting to stay in my home. But I don't want to stay there. What I want to say is, it's great. It's really great that you're helping the community. We love it. But that's not the problem. And, you know, these are things that we already know what you said today. In fact, I woke up one morning to a big ad with Brenda Wright telling about all the nonprofits that we're helping. That's not going to help us. I mean, I appreciate that. But I think, what if you had taken the money that was paid on that ad and put it to help a 90-year-old woman who lost her husband? You know? I mean, this is real out here. And you people, you're really not, you're not taking the time to listen. I wish all of the people in trouble had spoke first because you get tired. And a lot of times, Wells Fargo people are, oh, okay. And the other thing is, okay, you're beautiful. You didn't have these problems. These other banks did. But it was World Savings, Wachovia, and you. But you have to take the responsibility because you have those. Right. There are loans hidden in trust. But you're not taking it, I mean, it's illegal foreclosure. You can't even foreclose on them. But what, everybody is together, so you're able to do it. And I'm really outraged.
Let's see. I think this is the third or fourth meeting where many of you have come to speak on this subject. If the room is uncomfortable or not cool enough for you, I suppose I could apologize for that, but it's too late to mean anything today. Secondly, this issue not that I'm trying to give you any kind of a lesson about what we do here on the board, with our policies, with our investment decisions, with our voting on proxies. A huge part of the relief, I think some of you were speaking about in the past when you explained to us the very serious foreclosures you're facing, very, very difficult, getting ready to lose your houses in a number of forms. I would say most of this stuff, or none of this stuff, really will affect that. Not that the bank has to listen to us. We do own a number of shares with the banks. But I don't, whether we vote yes or no, the solution you may be looking for, whether it's personally or against the problems with lending in the housing industry. Actually, we're concerned about lending literally around the world, because we do invest around the world, and we work on both sides, meaning we invest for equity, we lend to all sorts of buyers of businesses and operators of business. That these motions really are not going to solve that problem.
My name is Linda Ray. I'm a member of the Retirement Board, and I'm here to testify so that actually not Wells Fargo, all the banks, our retirement system is invested in some of these banks, and we want to stop predatory lending and have a fair I guess, outcome for our members and community that have loans with these banks.
And are you a retiree?
Yes.
So you feel your money shouldn't be going to the Wells Fargo Bank?
Not unless it changes its practices.
Do you think they're going to?
Well, that's what we're here for.
Hey Walker, I'm a retiree, and I'm with RECCSF, which is retired employees of the City and County of San Francisco, and also Protect Our Benefits, and SEIU 10-1 West Bay Chapter. And I'm here to support the two motions that have to do with predatory lending, which has helped cause this great economic crisis in USA, probably worldwide, okay? And a lot of people I know have lost their homes because of the way the loan packages were set up. So we're here to support the motions made by Herb Meiberger, and also probably, I think there's another gentleman too on the board.
And it seems like the banks have gotten away with these kind of criminal practices. Why is that?
Because of deregulation a long time ago, that's one. And because the American public didn't really know what was going on. Everything was done behind closed doors. The way they bundled the loans. They sold the loans to people like variable loans, when the wise thing to do would have been to caution them about them, because, as you know, the interest rates have changed, and now those loans are have tanked. It was, lack of, I would say, social justice commitment, and just plain conscience on the part of the lending institutions.
So what is the union's position?
As far as I know, they're against the predatory lending. A lot of their members have been harmed, especially minorities and women. They seem to think that all of the above are suckers.
I'm Monica Kenny. I'm affiliated with ACE, the Alliance of Californians for Community Empowerment. I'm here today in support of the two motions. I'm a former city worker, and I do not condone the presence of former employees or current employees of Wells Fargo making decisions about where our public employees' money goes. It's already been shown that these folks have been guilty of nefarious banking practices, including predatory lending, which they were fined $175 million for, Wells Fargo specifically. Folks who were affected by the predatory lending live here in the city of San Francisco. We've got folks who are retired public employees who have lost their homes, muni workers, longshoremen, so it's the gamut. While they have been shown to be guilty of racist lending practices, they've refused to comply with the Security and Exchange Commission's subpoena of their lending practices through 2008. So, we're here to attack the head at all angles. We're not going to stand for this.
My name is Pat Gray. I'm a retired city employee, and I'm upset about our retirement money being handled by Wells Fargo, because I think Wells Fargo is a pretty corrupt operation, and they're doing awful things with our, I'm been telling people all for the last couple of years, take your money out of the banks, take your money out of the major banks. Well, I think we ought to take our retirement money out of the major banks. We can't starve the creature that is devouring us if we stop their liquidity, take our money out of their hands, and then maybe we can take control of something in this country. The bankers have taken the whole thing.
And where should they put the money?
We need a public bank. It's passed in the state of California 3 times to have a California state public bank, but it was vetoed and vetoed. They have one in North Dakota, I think. The city of San Francisco has enough money to have our own city bank. Put our money in there, put our savings in there, and loan it to people. Keep our money here in town. We put our money in these big banks, and they suck it up to Wall Street, and they have a really good time with it. So I want to starve the creature that's devouring us.
So again, in terms of voting for the level 1 and level 2, I do not see where the case has been made that any of these banks are guilty of items that we need to tell them to change. I think the banks have already started the change long before this came. Why did they do that? Banks have their own reasons for running a intelligent, fair operations. They have their own reasons why they want to be a sustainable entity. But as for this issue of how this motion that is before us, voting no on level 1 and level 2, yes, I am prepared to vote on that.
Well, that's some of the practices that Bank of America, Wells Fargo, and all the other big branches took advantage of Latinos and African Americans with their high rate interest loans, and that's what led to a lot of these problems, and also their actions with the city workers retirement fund also, so I'm being a union member, not with the city, but a Teamster member from the Teamsters, Local 853, and so I'm here to support them.
So how did they take advantage of people?
Well, by offering them the teaser rates, the pick-up payment plans, and starting off low and then ending up high. And then when they did get into problems, they made it very difficult for them to obtain any kind of help, and they make it very, very difficult.
So you think that they were conscious about what they were doing?
Oh, I'm sure it was, because if you look at the maps of all the foreclosures, you'll see a pattern of the areas in which the banks have operated under and who they are dealing with, So most of the, like Bank of America has a lot of the Latinos, and then if you look at Wells Fargo, a lot of the African Americans, so they kind of divided it among themselves.
Do you think they should be criminally prosecuted?
Oh, I agree, they should. I think it's time. It's time for them to get criminally prosecuted, but I think the problem with that is that they have a lot of politicians within their back pocket, providing them with campaign funds and other issues.
So you think it can be successful here?